Hey traders, welcome back. So I got another email question. I really appreciate your comments that come in. We use them all the time, so we encourage you to let me know your thoughts on some topics we can cover in the comments. But this one sounds like a real simple one. Hey Mike, how do I capture edge? Well, I'm going to show you how a risk manager redefines edge, and it's much different than what you hear everywhere else. All right, so this question comes from Alan, and I got his permission to read his email. So Alan asks, show how trading edge plays out over time and shows consistent gains. Okay. And second, oh boy, how you psychologically maintain a positive state of mind required to perform well and grow your account. Wow. So that's a loaded question. I apologize for the delay because I've been putting this aside because it's got a multi-layered depth. But let's focus on this edge thing to where how he wants to know how it plays over time and shows consistent games. And if you stick around towards the end, I'm going to give you a link to one of our mastermind calls that we do just for our members that really take a deep dive into sort of the analytics of edge and how we get into it. So stick around for that link in a little bit. So the first thing I want to address is this edge thing. All right, we all talk about it regarding the strategy. What type of edge does your strategy have? Obviously, really, really kind of important. But there's other parts to edge that I want to sort of unfold. And the first part is about execution. You can have a certain edge, and let's just define edge maybe, in your results as a profit factor on a particular, strategy or even win-loss, although that's not really that important to me. So if you look at the profit factor and say, okay, well, this has a positive edge. Well, maybe this strategy has an even better edge, but you're just not executing it effectively or the way it's supposed to be done. So, and again, everyone has their little human flaws and stuff, but the profit factor should be optimizing your strategy. Your job really as a trader is to execute the plan. So the anticipated profit factor should be there if you execute it properly, again, over a series of trades, and we'll talk about that in a second. So what I want you to do is identify, are you executing the plan effectively? That's really what creates the edge. The strategy itself is really what we hear a lot of times on YouTube channels and things where, well, does your strategy have an edge? But you can bring edge to that too. Are you trading it at the most optimal time frames? Are you pushing it when you have an A+ setup as far as size? All right. These are little things that add to this overall edge component, which will really accelerate your journey as a trader. So I want you to look at those other things. What are the other things I want to do? And again, trade journal analytics really pays off here too. What were the confluence factors that you used in your strategy? Maybe you'll have 2 or 3, but maybe one of them really is hitting it out of the park. Does your journal identify that? Say, for example, you have a trade where you have price coming down, say, moving average, all right, and you're getting into it. All right, you're going to enter at that moving average. But maybe your other confluence is, say, a VWAP indicator or something like that that supports that moving average. Well, if the VWAP doesn't support it, what are the differentials in results? All right, doesn't mean that the more confluence the better. In fact, the math shows that the more you have, the more kind of things even like flatline as far as results or keeps you out. It over filters certain trades, so your profit factor actually declines. Sort of a math hack that you want to consider. But to summarize, which confluence factors are having the most success or giving you the most profit factors? So we want to look into that as well. The other factor I want to look at as far as edge is what are some of the things you're good at? And again, it goes back to that SWOT assessment, right? Identifying your strengths. What are you good at? Is it something where you're just a good scalper and you're just like, I'm just really good, discretionary? Maybe it's one product. Like that's sort of my little strength, my S&P futures. That's my baby. That's my bread and butter. Sure, I trade options, stocks, and FX, but when it comes at the end of the day, that S&P futures pays the bills. All right, it provides the lifestyle that I want. I know it like the back of my hand. I kind of know when there's a sort of a fake out and stuff. It just comes with experience. That's edge. All right, it's not about strategy. So let's widen the scope of this definition of edge and go outside that strategy box, which you're hearing all the time, and let's sort of start today by widening. This is sort of the goal and objective of this video, to widen the scope of what we consider edge. And by doing it is taking your skill sets and optimizing those strengths. All right, so the next one, this is where I really, as a coach, really try to accelerate that edge component, is really identify the areas that you're struggling with and how quickly we can place actions to resolve them. That will give you the edge. right? This has nothing to do with strategy. The strategy was there from day one, but maybe it was a question of execution, or maybe it was a question of fear, whatever it is. We're going to identify it, address it, take actions, and resolve it. That will give you the extra edge. Remember, the strategy hasn't changed from day one, but what we're doing is we're going to change the components of yourself to make sure that edge sort of comes out of the strategy. So see where we're going here? We're widening the scope of edge. Next, something I want everyone to do, and you're going to probably hear me talk about it more and more throughout the year. I want you to assess your trading in more of a series of trades. All right. I hear it a lot where I went 1 and 2 this week, a rough week. And maybe that third trade was, profitable and just something happened, a news event came out that you didn't know about or something. All right. It happens. But we're measuring our success and or failure, which really affects our confidence in both ways, over such a small series of trades. Sometimes it's a day or an afternoon, or maybe even a week. Take a series of trades, 50, 75, 150. If you're a scalper, it should be maybe 250, all right, if you're doing 20, 30 trades a day. Assess the results and your ability to execute it over a series. It will smooth out those little sort of nuances and also gives you a pass on a couple bad trades that you effed up on, right? It kind of gets buried in the whole big number. That's okay too. I do it all the time, all right? I journal it, but I do it all the time. Rather than say, I went 1 and 2 today or 2 and 1, I crushed it, I had such a good day, right? Let's start talking in series. You're going to hear more and more about this, and I think it's a big component of how you can effectively assess your results, your performance, and ultimately your edge. All right, so let's get to the second part of Alan's double-decker question here. How to psychologically maintain a positive state of mind. So understand as a trader, and this is sort of a quick hack, but try to get, and this is where we get into the mindset here, all right? But understand that your job as a trader, it sounds weird, but it's not really to make money every day, all right? It's really about executing your plan effectively. So when you go with this mindset, saying, did I execute my plan effectively? Or in the beginning of the day, pre-market, say, okay, my job as a trader to execute this plan effectively, right? This will put you in a sort of a psychological state of mind. Have a little hack, have a little post-it note on your screen. Read the highlights of your trading plan. Have sort of a mission statement. My job is to execute a plan. And it will put you sort of in a psychological state of mind and put that sort of P&L burden off of you, which is so minute when you're measuring it like intraday. It's kind of insane, to be honest with you. But put that aside. Just say, I'm in a positive state, and I'm going to make sure I just execute my plan effectively today. That's sort of your goal. And tie it to the ultimate result. Not about if I trade effectively, I'm going to have a positive P&L, because the market won't always give that to you. If I trade my plan effectively, right, I will have the goals and dreams that I've always wished for as a trader. All right, we're going to connect that if I trade effectively to your why, your ultimate purpose, not about the damn P&L that you see on your screen, at 11:30 a.m. All right, tie it to something big. If I trade my plan effectively, I'm going to have all my goals, all my dreams that I ever wanted as a trader. And by the way, it's true. So, stay it, reaffirm it every day, and make sure that's sort of like your psychological mantra going forward. Okay, so the next part of how I maintain a positive state of mind, or my suggestion to you, is understand that as humans, we are sort of filled with flaws, and this business as traders really brings out all those flaws. But what I want you to do is accept the fact that it is an imperfect state. Okay, it's not where you just you make a reservation for dinner and an email pops up 2 seconds later confirming your reservation, right? There's a lot of things, a lot of dynamics going on here. But what I want you to do, and keeps you in a positive state, is thank yourself, reward yourself of the acceptance that this is a randomness type business, and the fact that you've identified, like Alan did, and reached out. This is pretty cool. Like, you took such a great step in identifying that area that you need to work on. So congratulate yourself on that. And the next key here is to identify and really congratulate yourself for starting the identification process. Is the key to success in everything, whether it's corporate, personal, and of course in trading. All right, and along those lines, kind of hinted on it just before, is accepting the fact that the market will have irrational behavior, right? There's a sort of acceptance, and I'm going to get a little Mark Douglas trading the zone here, but it's just filled with randomness. We don't know. We don't know who the next players when we push the button are going to be buying or selling. We hope they're going to be going in the same direction, with the same bias as we are. But it doesn't always happen. All right. And maybe sometimes they are. They're just maybe waiting for us to get stopped out and then they go. We've all been there. Right. So this sort of acceptance of market behavior, I have a sign behind my screen here that says it is what it is. I mean, it's really sort of my psychological mantra to keep me in check, and you just kind of shrug it off, you move on. Accepting that plays a big role in kind of building your psychological muscle. All right, so the next one I'm going to kind of tie Alan's two questions into sort of one solution is understand that the bad days that you have, those ones where you do like the gut just hurts the whole night. We've all been there, right? They're just little blips in an equity curve 6 months down the road. All right, so understand, learn from them. Don't make those mistakes. Obviously, follow risk management rules, and maybe those are the times where you didn't follow them. All right, we've all been there. But understand that that bad day is just a little thing. If you do the right things, it's just going to be, and you notice this. You go to widen your equity curve. If you're doing well, you look and say, when was that bad day? You can almost barely see it on your equity curve. So understand that those sort of like end of the world, valley of destruction type days, which we've all had, really become little blips. I'm trying to, encourage you. I know it's difficult to go through those. Maybe you just, had one of those this week, but understand that the new journey starts, with tomorrow. It's a clean slate. We all start 0-0 at the beginning of the day. So understand that. Okay, what did I learn from it? What am I not going to do again? But understand that it's that thing just kind of goes away with time over a nice smooth equity curve. All right, and last, and this is one that really for me helps me the most when I'm kind of going through drawdown or things like that. Understand that this is really just a game that we're playing through using the markets to be profitable. A lot of times earnings will come out, great earnings, the market will tank, right? Poor projections, but it was better than expected or something, and they go crazy. And the same happens with equities and Forex and things like that. All right. Understand that this game that we're playing is just math. It's a math game. All right. I would be doing sports betting for a living if the edge was there, but it's not. All right. I would be playing blackjack all my life if it had an edge, but it's not. The markets provide you with an incredible amount of edge that we talked about before. All right. And the markets is really just a game to facilitate getting and taking advantage of that edge. All right. So understand my point here is that when you have a bad day or a bad week, how do I keep psychologically and fit? Say, it's just math, right? When you have a 70% win rate or a profit factor of 1.6, sometimes the other half wins, all right? The 30% comes, and sometimes they come in clumps. Don't you notice that? All right. Understand that's just part of the game. It's just math. And if I continue to do things in a series of trades, that whatever it is, 70% or profit factor should play out. All right. The randomness included as well. But understand that this is just a game where if you do it enough times, the math eventually has to take over, but not all the time. And that's what happens, what gets us frustrated psychologically. And that's what we need to overcome. So remember today, this is the one big one that helps me out. It's just a math game. All right. Understand. It's not you necessarily. It's not even the markets. It's just randomness doing its thing. So again, thank you, Alan, for that multi-layered email, and we appreciate it. And let me know in your comments if you have some topics that you'd like to know about. Even if it's a direct question, we'd be happy to look at. I look at all those comments, begrudgingly sometimes, but I look at all the ones that have good insight and also suggestions for future videos. All right. So as I said before, I promise you, click on the link below. I'm going to actually link you to an actual mastermind call that we have only exclusive for our members, but I'm going to make it available to you that really takes it in depth into the whole idea of trading in series. It'll help you get to where you want to go and maybe get you out of that sort of randomness rut that we sometimes all fall into. All right. Hope you enjoy it. We'll see you on the other side. Watch the video, and we'll see you next time.